Inflation in the Eurozone is cooling, and the timing puts the European Central Bank in a delicate spot. The latest data shows consumer price growth across the 20-nation euro area slowed to 2.8%. That is a meaningful step down from the double-digit peaks seen in 2022 and 2023, when surging energy and food costs pushed prices sharply higher. The ECB's target is 2%, so the gap is narrowing, but it has not closed yet. The reading lands just ahead of the ECB's next interest rate decision, which makes it one of the most closely watched data points on the calendar right now. Here is why it matters. Interest rates are one of the most powerful levers a central bank controls. When rates are high, borrowing becomes more expensive. That tends to slow spending, cool demand, and bring prices down over time. The ECB has been running that playbook for the past 2 years. A softer inflation print suggests it is working. But ECB officials have been careful not to declare victory too soon. They have consistently said they want to see sustained progress, not a single good month, before pivoting to a new direction. The measure they watch most closely is core inflation, which strips out food and energy prices. Those two categories can swing sharply from month to month, so core gives a cleaner read on whether underlying price pressures are actually easing. The broader economic picture adds another layer of difficulty. Growth across the Eurozone has been sluggish. Germany, the bloc's largest economy, has been under particular strain. Weaker growth does reduce the risk that inflation will flare back up, but it also raises the cost of getting policy wrong. Cut rates too soon, and inflation could creep back. Wait too long, and an already fragile economy risks stalling further. Financial markets have been pricing in at least one more ECB rate cut this year. This latest inflation data is likely to reinforce those expectations. Bond yields and the euro exchange rate tend to move noticeably around ECB decisions, as investors reprice their expectations for future borrowing costs across the region. So the ECB faces a familiar balancing act: cooling inflation on one side, fragile growth on the other. Policymakers will weigh both when they meet, and markets will be listening closely to every word of the statement that follows. The practical takeaway: watch core inflation, not just the headline number. It is the figure ECB officials lean on most when making their case, and it will likely be the one that drives the market reaction when the decision lands. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.